Hi guys, welcome back to the channel. I'm Sebastien Boyer, the approved guy, and on this video we're going to be discussing velocity banking, infinite banking, retirement planning, and generational wealth. Without further ado, let's get right to it. Velocity banking, infinite banking, retirement planning, and generational wealth. These are not new strategies or topics. There's nothing I'm going to say today that is new under the sun. I myself am a student and a practitioner of these strategies, and I teach this to my clients and my students, and I help my clients to implement these strategies. The problem with this space is that depending on who you speak to, you're going to hear conflicting perspectives. And what it really boils down to is what is the person you're speaking to familiar with? And where are they used to making money and helping people? And in my experience, it really boils down to what are your goals? What are your short term and your long term goals in life? No two people have the same goals and therefore should not have the same strategy. In some cases, you should have a blend and a mixture of all of these strategies together versus just one approach. But again, it all depends on what you're looking to do. So let's get right into first, what is velocity banking? Velocity banking, simply put, is speeding up how you pay off and eliminate your debt, as well as once you've eliminated your debt, speeding up the growth of your wealth. And that's going to be with compound interest wherever you can, as well as with compound credit. Um, and so there's different ways to practice velocity banking depending on your situation and how much debt you have, your credit. Ultimately, to practice velocity banking, you really need to be able to get access to a line of credit, whether it be credit cards or a personal line of credit or a business line of credit or a home equity line of credit. The lower the rates on that line of credit, the better. But ultimately, regardless of the rate, you're going to be able to leverage that line of credit to pay off other debt, and you're going to move all your income back into that line of credit. Now, it sounds simple, and it really is, but it's something that needs to be planned and strategically prepared for based on your situation. So you don't just jump into this haphazardly. You need to study it. You need to get the proper instruction and coaching and understanding, and you need to plan ahead to start this process. You don't just jump into this stuff, okay? And if you're somebody who's not able to handle leveraging debt, and you're just historically irresponsible whenever you have an opportunity or you have access to debt, then velocity banking may not be for you. It might be better that you stick with more of a traditional route of eliminating debt, like debt snowball or debt avalanche, which is basically taking your extra income and just dumping it into your debts. Again, there's more strategy to that, but that's a simple way of eliminating debt. And of course, I can provide you with a one-on-one session, a free consultation to understand this a little bit more. And if you really want to get into it, I provide a one-on-one velocity banking masterclass, which is optional. You can go to metalifeplan.com to research and to learn more about velocity banking. All right, so velocity banking is simply expediting, speeding up the process of eliminating your debt as well as growing your wealth. One of the key principles, and I want you to really keep this in mind, is that you really want to figure out or focus how can you give every dollar that comes into your economy more than one job before you put it back into the world. So before you pay a bill, how can you multiply that dollar, right? I'm not talking about taking it and putting it in an investment, which is good, yes, if you have a way to invest and grow your money. But I'm talking about every month that you have to pay expenses, you have debts to pay. How can you multiply that dollar before you pay that debt? How can you give that dollar more than one job? Okay, so velocity banking aims to do that. It aims to give every dollar more than one, at least two or three jobs before you put it back into the world and paying your debts and your living expenses. Okay, now infinite banking is taking velocity banking to the next level. Infinite banking is a strategy of leveraging life insurance, whether it's whole life insurance, universal or indexed universal life insurance, any policy that's going to give you high cash value. Now, whether you want to use whole life or universal or index universal is really going to be based on how much cash access you need from your cash value immediately. So to get the maximum cash value right away in the first year, first 2, 3 years, the only way to do that is going to be with the top mutual companies, and that's going to be using a whole life policy. Okay, and you're able to squeeze out between 80 to 90% cash value using a whole life policy so that you can use that money to invest. So what happens is your money goes into a life insurance policy. You're securing a death benefit. That's a legacy. That's generational wealth. Number one. Number two, inside the life insurance policy, your money is protected. It's safe. Number three, your money is growing compound interest depending on the policy, anywhere between 1.5 to 6% compound interest growth inside the policy. And you're able to borrow the money outside of the policy. Your money stays inside the policy, continuing to grow compound interest, but you're able to borrow the money separate from the policy and continue to use that in the real world. So you've given your dollar at least 3 or 4 jobs here. You're protecting it, you've secured a death benefit, you're growing compound interest, and by the way, that's tax-free growth on that compound interest. And you're able to borrow the money from the policy and continue to invest it in the real world, whether that's your real estate investments, your crypto investments, Turo, whatever you're doing, whatever kind of business you have, you're able to put that money back into whatever is going to make you more money in the real world. But before you put it out there, before you put it, you protect it. You gain that compound growth, you secure that legacy, that death benefit, and then you're able to still use it. Now, when you borrow money from a bank, the bank sets the terms. They tell you what's the due date, how much to pay, and if you don't pay by that due date, it's going to affect your credit. It's going to get late fees, where when you borrow money from your policy, you set the terms. So you can set to pay $1 a month if you want, or pay interest only. It's entirely up to you. And there are strategies of how much you borrow that are wise, and ways to be very safe in how you set up and you structure these policies. So just any old life insurance agent is not necessarily going to know how to design these policies and help you to implement them properly. Again, I've learned from the best. I'm working with the best. And as a result, I'm able to provide my clients with the best. And so whether you work with me or you work with someone else, make sure that they know what they're doing. Many times, if you call the insurance carrier directly, they're going to just give you a cookie cutter policy. They're not necessarily going to design it in a way that's going to give you that maximum cash value, if that's what you're looking for up front. But again, if you're looking for a more long-term strategy, you might want to consider index universal. And that type of policy is going to give you much greater gains in the long run, much greater cash value and death benefit, where you can even set it up in a way where you can have income coming to you for the rest of your life after a certain amount of time. And that's going to be tax-free income. The younger you start, the better, because every single year that you wait to implement these strategies and purchase your life insurance is going to get more and more expensive, because you're getting older, which is your risk is getting higher to the insurance carriers. Now, when you think of life insurance, don't think of it just as, oh, death benefit, life insurance, I'm leaving something behind. Yes, that is true. But with the life insurance policies that are available today, you can customize your policies in a way where you have access to the money while you're living. And that could be short term and that could be long term for your retirement planning. You can set up a policy for retirement planning where after a certain amount of time, you could potentially receive 50, 100, or $150,000 a year in tax-free income from your policy. And what's beautiful about life insurance is that you have access to the money if you need to borrow it. So unlike other retirement plans, 401ks, etc., your money is it's stuck until a certain time. You're not able to get that money out. It's not liquid. When you do take that money out, you are going to pay taxes on that money. You're going to pay penalties and fees. Well, not with your life insurance. You're not going to pay any taxes on it, and you're not going to be paying penalties and fees because it is not a taxable event. Now, one thing that's very important when you design these policies is that you do not want them to mech. MEC is an acronym for a modified endowment contract. And that simply means that you're overfunding the policy greater than the value of the death benefit. And so if you design a policy properly and you say within the confines of how much you can pay into the premium versus the death benefit, and you build up that cash value, again, potentially 80 to 90% cash value in the first year. And that literally means within 30 days of writing the policy, you can get that cash value out and put it to work, and you set the terms on paying back that loan. To the degree where if you never even pay back the loan, the insurance carrier is going to get the loan back from your death benefit. So they're going to collateralize the death benefit, and this means that you technically don't actually have to pay back the loan. Now, you do have to keep your insurance active. You can't let the policy lapse. You have to maintain the minimum premium. And when these policies are designed properly, you will have a minimum base premium, and you'll have an additional premium allocation that you can pay up to. And this is the cash value that you can borrow from. So to learn more, we can create infinite designs. We can create so many concepts, again, for short-term immediate cash access, so you can continue to invest your money. But before you're investing it, you're protecting it. You're getting that guaranteed compound growth plus dividends and potentially index returns in the policy as well. All tax-free growth. You secured that death benefit. This is infinite banking. The reason it's called infinite banking is because you can use it infinite ways. And if you're paying it back, it's like a line of credit, and you can use it infinite times. Okay, guys? So far we've covered velocity banking and infinite banking. Now, if you take the infinite banking and you use it as part of your velocity banking strategy, this could be another way for you to eliminate debt or to transfer the ownership of that debt from the bank to your policy. So you own your own debt, and then you eventually pay that debt back at your pace in your time, not when the bank tells you to. So you own your debt, and so you can transfer debt from banks and lenders and creditors to your policy simply by using the velocity banking strategy in conjunction with infinite banking. Now, if you prefer to use the infinite banking for investments, to invest in your business or to grow wealth, that again is another way of using the policy design. If you want to use it for paying for your kids' college tuition, or to buy a vehicle, a car, or whatever you want to do, you can use it infinite ways. All right, guys. So velocity banking in conjunction with infinite banking, ultimately, all of this is going to contribute to your retirement. And if you set up policies in a way for retirement planning, you can have tax-free income in retirement. And no matter what, with these strategies, you will be building much greater wealth in terms of generational legacy than you could have built on your own, but just based on your business or your investments in the real world. No one can out earn the amount of money that you can secure on a death benefit from your life insurance based on your income in the real world. So it doesn't matter if you what level you're at. You can always purchase life insurance. Well, I should say, in most cases, depending on your age and your health, you can purchase life insurance, and the death benefit, the value of the death benefit, which will be left as a legacy to your beneficiaries, will typically be much greater than what you would have been able to earn in the real world. Now, you combine that with the ability to borrow money from the policy, from the cash value, to invest and grow in the real world. You're doing what we said. You are velocitizing. You're increasing wealth and speeding up the process by giving every dollar multiple jobs. Okay, guys? So this is velocity banking, infinite banking, retirement planning, and generational wealth. The last and very crucial key component of this strategy is including a trust. Okay. And all of these tools, strategies are on metalifeplan.com, including a link to a reliable source and an attorney service to help you set up a trust. There are various types of trusts that you can set up, but what the trust does is it protects your tangible assets, and you're able to write into the trust laws or bylaws of how you want your assets to be dispersed upon your demise. That includes the money from the death benefit of the life insurance policy. And do keep in mind, any money dispersed through life insurance is tax free. So not only is the cash value that's growing, compound interest and dividends and index inside the policy, not only is that tax free growth, but then when that death benefit is dispersed, that death benefit is tax free. With the trust intact, you can set rules of how that money gets dispersed to your beneficiaries. So you can control that disbursement versus it just being dispersed all at once. You can set milestones for that money to be dispersed out depending on how you design and how you set up your trust. Now, guys, I am not an attorney. Okay, I am not a certified financial planner. I am simply a velocity banking and infinite banking practitioner, and I am a licensed life insurance agent. I work with the top insurance carriers that provide these policies that allow you to design them in a way for the infinite banking and for the retirement planning. So you can work with me. I'm happy to help you. Again, provide you with a free consultation, but you can work with anyone you're comfortable with. Make sure you take the time to research and understand these concepts. Again, read the book, Becoming Your Own Banker by Nelson Nash, the godfather of infinite banking. All right, guys, so if you have any questions on velocity banking, infinite banking, retirement planning, and generational wealth, I'm happy to provide you with a free consultation. I hope I've given you some references of resources where you can learn more. I hope this video has provided you with value. Please like, subscribe, and share this content with others. And I do look forward to assisting you and being of service in your journey of eliminating debt, growing wealth, creating that legacy and generational wealth. Thank you. God bless you. And we'll talk to you soon.